Hello, everyone. This video is chapter 6, and the topic is vendors and expenses. So let me go ahead and share my screen. All right, vendors and expenses. In this chapter, you will be learning about navigating vendors and expenses transactions using both the navigation bar and the new icon button, just like you kind of did with customers, except now it's going to be for vendors. We'll also be working with vendor lists. And just like you did with customers, you can update the vendor list before entering transactions, or you can update the vendor list on the fly while entering transactions. Then we'll put some attention on using forms, specifically the expense form, where you can make a payment using cash, check, and a credit card. And then the check form, which is just for checks. You're using your checking account. And then this thing called bills, pay bills. This is for when you purchase something on account and you're going to pay them later. So you enter the bill, you create the liability, and then later you pay that bill. Okay, to put things in perspective, our sat nav focus is going to be on transactions, specifically for vendors and expenses. There are two different ways to navigate entering vendors and expenses into QuickBooks, using the navigation bar and the new icon button. Okay, and these are the types of transactions that you'll see for vendors. So if we went ahead and went new, and then we go over to the vendor category, we see like expense, check, bill, pay bills, purchase order, vendor credit, credit card credit, and print checks. Expenses are for purchases that we make payments right away. And this expense form, you can pay with cash, check, and credit card. The check form is kind of the same thing, except it's more specialized. You can only use it for taking money out of the checking account. So it's for purchases where you pay it right then. This, the bill and pay bills, this is where you you're going to buy something on account, right? So you enter the bill, you create your liability, and then later you pay the bills. The purchase order, we're not going to worry about that. That's related to inventory. And I believe that that's the next chapter, in chapter 7. So we won't worry about that right now. The vendor credit, that's when a vendor gives us a refund or a reduction in the amount that we owe. And the credit card credit, well, here it's a reduction in charges by the vendor to our credit card. Okay, so that's what we'll be working with. The vendor list collects information about vendors so we can reuse the information without re-entering. So when we enter a vendor and we put in the address, we put in the terms, when you go to a form, a lot of that information will automatically autofill. So you don't have to keep re-entering it. It's really convenient, okay? QuickBooks considers a vendor to be any individual or organization that provides products or services to our company. And let's see, on page 294, it says that financial institutions such as banks are considered a vendor. And even the IRS is considered a vendor. That's interesting, huh? I wouldn't have thought of that, but there it is on page 294. Now, there are two ways that we can update the vendors list before entering the transactions, and then on the fly while we enter transactions. Okay, so if we want to update the vendor list before entering transactions, we'll go ahead and go to the vendor list. So in the navigation bar, go to expenses, and then go to the vendors tab, and that'll put us here. And if you, let's say you wanted to add a new vendor, we'll just go ahead and click on the button, add new vendor, right? Now, this is what the book says that our screen looks like to enter vendor information. This screen looks a little different now, but you can enter the same information. So the new look basically is long. It's linear, and it keeps going down and down and down. So don't forget to enter your terms. In this case, it's net 15. And where is that? It's under the last section called additional info. Okay, it looks kind of like your updated customer list. Now it's for vendors. So I didn't add it because I think it's pretty easy. It matches up pretty well. Nothing really different or too different that you can't figure out. Now, if you want to update the vendor list on the fly, I love that, saying that, isn't that great? While entering your transactions, what you can do is go up to the payee field, hit that chevron, and click on add new, and then add your new vendor. It's pretty cool. Now we're going to be focusing in on these particular forms, these first three: expense form, the check form, and then this sequence of entering a bill and paying bills. Okay, in the expense form, this is for transactions where payments are made at the time of purchase, and you can pay for that purchase by using cash, credit card, or check. Now, the check form is a specialized form where payment is made by check only. And when do you use that check form? Again, when payment is made at the time of purchase. Okay, and this form is for a check only. Now, if you want to buy something on account, right? So you get it, but then you tell the guy, "I'll pay you later." Then what you're going to do is you're going to enter the bill, and behind the scenes, it's going to create a liability. And then later, you're going to pay that bill and reduce your liability. So we'll be doing that. Now, this one, we add purchase order to the bill and pay bill sequence. We're not going to worry about that because this is for purchase of inventory, and we'll cover that in chapter 7. Let me talk to you a little bit about the one-step versus the two-step process. Almost sounds like a dance, huh? Let's do the one-step. Okay, now let's do the two-step. Well, what do I mean by the one-step? When we use the expense form or the check form, it's in one step. We buy what we're buying, and let's say we pay cash. Now we can pay by check, by cash, by credit card, but it's in one step. Now, what do I mean by the two-step? Well, in the two-step, we're going to enter a bill, and we'll show that, yeah, we bought the supplies, but then we'll create a liability that will be paid later. right? That's step one. And then step two is when we pay the bill, right? So we pay cash and reduce our liability. So that whole process of bill and then pay bills is what I call a two-step process. Now, you can see this schedule or this table on page 299. Notice that the bill form, you don't use it if payment is made at the time of purchase, right? Look at this. Payment made at time of purchase by check. Nope, because it's time of purchase. Payment made at time of purchase, cash. No, it's at time of purchase. Payment made at the time of purchase, credit card. Well, no, it's time of purchase. So it's only good for payment made later after the purchase, right? We enter the bill and then we pay the bill. So that's what that's all about here. Okay, you study this. This is a good recap of these three forms. Well, let's go ahead and take a look at the expense form. We use the expense form if our payment is made at the same time we make a purchase. Now, using the expense form, we can pay by cash, check, or credit card. So it's really the most versatile one between the expense form or the check form. Okay, let's go ahead and pretend we're going to do this. We hit the new icon and then click on expense, and there it is. And this is what we're going to do. We're going to enter who we're paying. In this case, it's Bitchett Supplies. And looks like here, the payment account is 2100 Visa credit card. I guess we're paying by credit card, right? If we're going to pay by our checking account, we would put like 1001 checking, but we're not. We're going to use our credit card. So we put this account. We put in the payment date, which is January 23rd, and payment method. Well, we just said we're going to use our Visa, so it is a credit card. Now, why did we make the payment? That's where we go down to category details. We're paying something here because we're buying job supplies. So this is where you'll put this in. It'll be a drop-down arrow, and you can put in your account. Then you can put in a description. Now, these supplies are for Kuno. Okay, so that's one of our clients' pets. And the amount that we're purchasing is $100. Now, what we want to do is we want to be able to bill these job supplies that we're buying to Kuno's owner, which is Angel Merriman. So we click on the billable check mark here, and we have the customer is Angel Merriman. Okay. Next, if we wanted to say a few more words about this transaction, we could put more in the memo section. And I particularly like this because you can attach the actual source document, which is really kind of nice. Now, we can also use the check form. Now, this is a particular type of form because you have to make the purchase by using your checking account, right? So, and it's done at the same time we make a purchase. So this is like a cash purchase, right? You don't use it for like say a purchase on account. So let's try this. The new icon, and then hit check. Okay. So here we have Carroll Design Media. That's who we are paying. And notice here, we're going to use our checking account 1001. Now, in a business, you could have different checking accounts. So just pick the one that you're going to pay out of. And notice this, we've got a mailing address. This will pop up automatically if you put it in the vendor list, a lot of this information can be popped up automatically. Here we put in the payment date, January 23rd, 2023. This check number should kind of advance to the next available check. So, and if you want to override it, you definitely can override it and put what you want. But usually, you want to use the next check number. So when you actually print your check. So in this chapter, I don't think we're printing any checks, which is kind of interesting. Hopefully do it later. So I think you need to know that process of actually printing your checks. Okay. So then why are we writing this check and taking money out of our account? Well, this one is for advertising and marketing. And we can put in our description, which is social media design, in the amount of $270. Now, this time we're going to leave the billable and the customer blank. We're not going to bill our customer for this advertising. It's our own. Okay. And again, if you wanted to add a nice memo to describe in more detail what this transaction is all about, you can do so right here. Okay. So we're going to go ahead and save and close. Now let's move to bill, pay bills. So here, if we hit new, we see the two forms. First is the bill, then second is the pay bills. When we buy something on account, we are going to pay them later, right? So we're going to enter the bill, and it's going to cause a journal entry to increase our accounts payable. And then in about 30 days or so, when we're going to pay it, we'll use pay bills to reduce that liability and pay what we owe. Okay. So here we go. Hit new and then hit bill. And this is what it looks like. Let's pick our vendor. We're buying from Joseph Leasing. Now, this is a real good example of how information flows from the vendor list into your form. See, this would automatically pop up, this mailing address, and this net 15 days will pop up as well. And you'll need to put in the bill date, which is the date of the invoice, which would be January 23rd. Now, this due date should be calculated for you automatically based upon your terms and the date of the invoice. So you have to trust me on this, but what's 15 days from January 23rd? Well, it's February 7th. So QuickBooks calculates the due date for you automatically. Here, the bill number, we're going to leave that blank. I would suspect that would be the number of Joseph's invoice to us, but we don't need to put that in. Okay. And then, well, why are we entering this bill? It's for rent and lease expense. And what is happening here? It's equipment rental, and it's for the amount of $420. Here, we're going to leave the billing and the customer blank. Now, this item detail, we're not going to worry about that in this chapter. This is for when we start working with inventory. So let's don't worry about that. Here, again, if you wanted to put more detail about the transaction, you can. And then here, if you have a source document you want to attach, I really like that as an auditor because, it's right there. I can see it. I can see, well, you say you have this liability, but why? Excuse me. This is the source document. It's what triggered this transaction. It's great. Okay, so we entered the bill, right? We hit save, we entered the bill. Now it's time to pay the bill. So how do you do that? You would go ahead and hit new, pay bills. How about that? Pretty easy. And this is what the pay bills looks like. First off, what account are you going to be paying the bill with? Well, here we're using our checking account 1001, and we need to put in the payment date, which is January 24, 2023. And I believe that this would be the next available checks. So I would just leave that alone. I mean, if you, for some reason you wanted to put another number in, you can, but I think just leaving that alone because you want the system to keep track of your checks. So that'd probably be the best thing. And then now you just check which bills you want to pay. And QuickBooks keeps track of that. In this case, there's only one. So we're just going to go ahead and click Joseph Leasing. And the open balance is $420. Now, this payment field should auto-populate because it's assuming that you want to pay the whole thing. I suppose if you just want to make a partial payment, you could. But I think in our textbook, at least at this point, they never have you do that. It's going to be for the full amount of the invoice. So, okay. And then you're just going to hit save and close. Now, in the accounting essentials, they're going to talk to you about accounts payable and what accounts payable are. They're just amounts that our business is obligated to pay in the future. And then it will talk about an accounts payable aging report. And you will be printing an accounts payable aging report at the end of chapter exercises, right? And what's the purpose? It just shows the balances of the invoices and the age of the accounts to help us keep track of what we owe and the amounts that are due. Okay. So that's pretty much it. Like always, there are videos the publisher has provided here at the publisher site. In Canvas, I pulled them and put them in there. So if you wanted to get more enrichment, definitely avail yourself of that. So that is it for me. It's a little bit shorter chapter, I think. So I think you'll enjoy it. I didn't see too many problems with it. So anyway, I'm going to stop the share here. And I just want you to have a good time with this chapter and happy study. Bye-bye.